welcome back. You're watching The Money Show on ET Now. Well, it's time for our Meet Your Fund Manager segment, and today we are going to be bringing on board the manager of the Axis Multicap Fund, or should I now say the Axis Flexi Cap Fund. Of course, after SEBI's new notification asking multi-cap funds to split their equity holdings across the market capitalizations equally, in order to be called a multi-cap fund, many fund houses did decide to change their categories to the newly introduced Flexi Cap category. This is what Axis Multicap Fund as well has done. So let's talk about this newly rebranded fund with the fund manager himself, Shreyash Devalkar, who's also a senior fund manager for equities with Axis Mutual Fund. So Shreyash, thank you so much for joining us today, and wish you, your family, and the team at Axis Mutual Fund a very happy new year from all of us.
Thank you.
Shreyash, to start with, if you could just sort of walk us through what the multi-cap fund was like, what was its split between large caps, mid caps, small caps? Because, I see some of the top holdings. This is only as per your November fact sheet. And, you've got all the big guys over there right on top, HDFC, RIL, TCS, so on and so forth. So what was this split like, in market capitalization for Axis Multi-Cap Fund?
Sure. Thanks, and Happy New Year to you and your viewers. As far as Axis Multicap Fund is concerned, it was launched somewhere in 2017 November, and it's a Flexi Cap, and we decided that it will be broadly across market caps. But considering the market conditions then and our view on various categories and stocks and sectors, we have been running this fund as more large capish. So in this fund, it would be mostly you will find large cap, and that's where you would notice that there are many large cap in the top names as well. Having said that, in last 1 year, over a period of time, we have started introducing some mid caps. Actually, some of the mid caps which we introduced eventually became large cap in last 1 year, and so technically they are now classified as large caps. And that's where that is also one of the reasons why the large caps also sounds more in this fund compared to earlier. Otherwise, the fund is well diversified across almost 35 to 40 stocks and across market cap. But as I said, we started with mostly large cap bias when the fund was launched in 2017 end. And some mid caps we added. Some of them are large caps now, and we have also introduced some of the mid caps. So the journey is for this fund is to have best stocks irrespective of what is the market cap. That is the proposition, and that is the classic definition of a Flexi cap strategy.
So what sort of, as the name suggests, flexibility now will this Flexi Cap Fund give you? There'll be no caps, of course, on what extent of the fund has to be in a particular market cap. What does it essentially mean for your unit holders, if you just had to put it simply?
So actually, as far as investors are concerned, as far as definition is concerned, the definition always has been this, that you can have whichever market caps, whatever exposure you want in various market cap segments. The definition has been always that, and we have been following that. Now the name is changed to Flexi Cap per se. So the way I understand is in this category, the investors, there are two, broadly I would say, there are various expectations from this category. So some expectations can be that this category should have multiple exposure to various market cap segments, like including large cap, mid cap, small cap. Some expectations could be from this category that the fund managers decide based on their outlook what should be weight of large cap, mid cap, or for that matter any particular stock in this. So with this segregation, actually now as per the expectation of investor, the investor may choose to be with a Flexi Cap fund, wherein one believes that one want to be in a fund where fund managers decide what should be the ideal proportion, and secondly, if someone wants a real multi-cap in a sense, 50%, 25%, 25% large, mid, small exposure. In that case, one may also try to choose that.
So, Shreyash, if just want to understand that if I have an Axis large cap fund, then I have the Axis, which will soon be called a Flexi cap fund. What would be the key points to distinguish between the two funds? Because, like you mentioned, your current, the strategy of the Flexi cap fund will change based on, what the view is. Right now, you have a very large exposure to large caps. So if I had to distinguish, then what would be a distinguishing point? And again, the reason why I ask you is because a lot of viewers as well, based on how, how risky or not risky they want their portfolio to be, accordingly pick, funds from a mutual fund house, whether it's large cap, small cap, mid cap, what have you.
Okay, so as far as Axis Flexi Cap Fund is concerned, we would its history has been so far, it has been large cap biased, and with select mid cap, some of them, as I said, became large cap, and incrementally also we are adding few more mid caps in this fund, but here at least my way of operation would not be just to increase a mid cap and small cap weightages just for the sake of it. If you find a good story in that segment, that will be definitely part of this portfolio. And so that's where it would be more market cap agnostic. And that's where I would not like to focus on whether it will be a large cap heavy or small cap heavy, but by philosophy or by way of the way our way of looking at companies, this fund has been with large cap bias, and your question was specifically as far as the difference between the blue chip fund, our large cap fund which I manage, versus this one. The differences are, some of them are like, the blue chip fund is broadly sub 30 stock portfolio, and it is in entirely in a large cap. While this fund, if you would notice that it is somewhere around 37, 30, 35 to 40, exact number would be somewhere in that. And probably you would have seen that the number would have gone up in last 1 year. And even the exposure to some of the new stocks would have gone up in this fund. Again, irrespective of market cap, some of them would be in a mid cap. So then that's how this fund would be different compared to a large cap fund, which is relatively 100% large cap, and relatively more concentrated compared to this one.
All right. Okay. So how do you, how do you essentially pick and choose stocks for the fund, Shreyash? I've asked you these questions in our past Meet Your Fund Manager segments as well. And I think it's a question that gains a lot of importance because we've been seeing a lot of times that funds as a whole, their NAVs are, brought down because of one bad sheep over there or bad apple over there. So what are the factors that you look at, when you pick and choose stocks for the fund?
So what we look at is, basically our philosophy has been quality and growth. So the filter is quality, and the selection criteria is growth. So we, as far as probably if we take the example of multi-cap fund, this fund would have been much more concentrated even 1 year ago. It would have had somewhere less than 30 stock even in this fund. And actually at that time, my Axis Blue Chip Fund, which is large cap fund, had less than 25 stock. While both these funds have increased the stock in the blue chip, it has gone up by 6, 7 by number, and in this fund it is more by 10. So just I'd like to highlight the reasons for it. When we choose a stock, so as I said, the quality remains the starting point or filter, and there we would not like to dilute. But on the other hand, when it comes to growth, 1 year ago or 1.5 years ago, probably very less segments of the market were growing or showing a good cash flow profile. While for various reasons, many sectors started performing and delivering in last 3 to 4 months, for various reasons, and each particular segment has its own story to tell. and that's where the number of stocks would have gone up in both these funds. So that's why I said the quality and growth. The quality as a filter remains always, and when it comes to growth, when we see many sectors, many companies growing, then the fund gets broad based, obviously. And if you find the way we found in 2018-19, only few of them are growing or only few of them are delivering, then we would have got concentrated during that time. So this is how broadly we look, try to pick and choose companies in all the funds. So quality and growth is a parameter, and based on the change in the environment and company specific issues, so we would add or remove that stock in the fund.
These last few months, perhaps having to do with the entire confusion as well around multi-cap funds, we've seen a lot of outflows. In fact, not just in multi-cap funds, frankly, across equity mutual funds, we've been seeing a significant amount of redemptions, outflows. It may have to do with the fact that, look, the markets are, doing extremely well. So people want to take some money out of the table, and, they may be faced with cash crunch. But aside of that reason, Shreyash, do you think that this market rally really should be used as essentially a way for people to take out money from off the table? If you could just talk to unit holders about this redemption trend that we've been seeing.
As far as redemption, so the way I explained about our stock addition and stock removal strategy, the way I explained is it is about whether many companies are doing well or they are not doing well, based on which we do. So as far as individual investor, if I'm considering, then as always, I would not like to recommend anyone to take this decision based on the market levels. Simple reason being, if we would have discussed probably 7 months ago, then probably it would have been very difficult to predict that the market would be at around 14,000 Nifty levels, and now it is. So market level prediction becomes very difficult, and that's where instead of reacting to the market levels, it is always beneficiary for everyone to act based on their goals and invest more systematically. That mantra has helped everyone over a longer period of time always, rather than trying to time the market. Because as I said, in last 7 months, there could have been various instances of sale also. And while those were there, the market went up right from 8,000 or below to almost 14. So one could have had that thought at multiple point in time. So instead of trying to time the market based on market levels, it is better to be goal based, individual goal based when it comes to investing and redeeming.
Yes, goal-based investing, goal-based redemption is what, Shreyash does advise. All of our personal finance experts as well advise the same. So, just because the markets are up, it does not really necessarily mean that you should redeem. In fact, that's the entire conversation that we had with Sunil Jhaveri as well, just before this conversation. So, Shreyash, many thanks for joining us today and, just talking to us about the newly branded Axis Flexi Cap Fund. Of course, it's going to come into effect by the end of this month. For now, it's still the Axis Multicap Fund. It's going to be rebranded, and you heard out from the fund manager himself. This entire conversation, as I always say, will be put up on ET Now's YouTube channel, so you can catch the repeat telecast of the same over there. And now on that note, we'll take a very short break. Don't go anywhere.